Welcome everyone to HueFin News. Today is December 24th, 2018. We are the home of the 2-minute price prediction, as well as giving you all the news according to the charts. Now, you may have seen a thumbnail, how the Grinch stole stocks. It does not look like a Santa Claus rally is coming to the United States stock market. Currently, the Dow is down 2.14%, 479 points. The NASDAQ is down almost 2% as well, and S&P 500 is down 2%. So with the shortened trading day today, it does not look like the Santa Claus rally is going to come, and the Grinch came and stole the euphoria that was in the market that began in October of 2018. Now we're going to talk about that, and we're going to look at some of the climax that the Grinch used to push prices down to the downside for the majority of the stock markets and all of the major benchmarks in this industry. Okay, now you can see here on the left side of my screen, this is an article written by MarketWatch with the title, "The Dow Skids About 400 Points Lower in Early Action on the Eve of Christmas." Now, here are some of the things that I pointed out as some of the things that the Grinch used to cause a lot of uncertainty and doubt in the United States stock market. And one of them comes from the Treasury Secretary Mnuchin, who conduct calls with major banks over the weekend about their liquidity to see if they had enough cash on hand to survive a recessionary or depressionary type market drop in space. And that caused a lot of investors jittery, because they wanted to know, why would Stephen Mnuchin have a phone call with the 6 major banks if the market was not as detrimental as it seems on the surface? So that's why we're still seeing a continuation of downside movement for a majority of the major benchmarks. And again, you can see here that this has been the worst week of trading since the financial crisis of 2008. That is literally about 10 years ago. So this is a market move that is of a huge proportion, because the last time that we had this potential move, or this move in the market, was during the 2008 financial crisis. So if that doesn't mean anything, I don't know what will. So the S&P 500 and the NASDAQ are coming off the worst weekly percentage declines in about 10 years, while the Dow booked its worst point drop in about 10 years as well. All 3 of these major benchmarks are set for the ugliest monthly drop since October of 2008, during the heart of the 2008-2009 financial crisis. The NASDAQ officially entered bear market territory on Friday, this past Friday, down 21.9% from its August 31st highs. Now, bear market is a terminology that many people in this arena utilizes to say when a particular instrument has decreased in price by 20% or more, they consider that a bear market. When it's 10%, it's only a correction from the previous highs. Okay, so they're saying that the NASDAQ is in a bear market now. 20% loss from its August 31st highs. The S&P and the Dow are closer to bear market territory, with the S&P 500 down 17.5% from the September 20 highs, and the Dow down 16.3% from its October 3rd high. So all of these things are negative for the market. Now, what's driving the market? Okay, ever since the beginning half of October, the financial market has endured a lot of uncertainty regarding the China trade tariffs, or the trade war between the United States and China. Jerome Powell went ahead and raised interest rates. That caused a lot of negativity to spur into the market, as well as the United States federal government shutdown. Seems as if that is putting a lot of pressure downward on the financial markets. And then you have Brexit. Okay, that it has a lot of uncertainty that's going to pan out during the month of March of 2019. You got the Italian debt debacle that is currently unfolding. And then, like we started early out in this article, the Steve Mnuchin calling the major banks to see if they have liquidity on hand in order to survive a depressionary or another financial crisis. Okay. Mnuchin also expected to hold a call Monday with the president's working group to discuss coordination efforts to assure normal market operations. This statement alone will cause a lot of questions as to what is going on with the financial markets here on the United States. Okay, to discuss coordination efforts. Now, I don't know, are they trying to use this as a political ploy to try to get some, to try to sway the news in one certain direction to get it off of a different direction? That could be the whole point of this particular statement. Or could we actually be in a recessionary, depressionary type period, and Steve Mnuchin is actually trying to prep these banks or try to get an understanding of where they are accordingly, if and in fact the market was to be pushed back down to what we experienced in 2008. Okay, another thing as to could be driving the market, I don't know why they really got this here. President Trump wants to know if he could fire Federal Reserve Chairman Jerome Powell. That to me does not necessarily mean, or seems as if that would cause the market to drop 2% across the board. This one definitely could. Investors digested the implications of a partial government shutdown, which could persist through early January. That is definitely causes a lot of volatility to hit this particular financial market, because people just don't know the federal government is going to be operational in the first couple of days, first couple of weeks of January, and that would definitely have a huge impact on especially the defense sector of the stock market. Okay, so this is what some of the strategists are saying regarding to the stock market. Stocks remain trending strongly downward in a trend that's nearly erased 50% of the entire rally from 2016 in the S&P. That is dramatic. That is huge. 50% gain is now out of the market from the rally that started in 2016. I don't understand what is a recession. I don't understand what is a depression when you lose 50% of the entire rally from 2016 to today's date. Okay. Now, I will leave you all a link to this article in our description of this video. But again, if you've been here before, you understand that we do not necessarily look at articles because there's a lot of opinions listed on the articles and in videos, but we only pay attention to the price chart. So we're going to look at these price charts to give you all an update of what we're noticing for the financial markets and to see if the continuation to the downside will happen. Okay, so now we're going to go ahead and look at the NASDAQ. This is the monthly chart for the NASDAQ, and what we are enduring for the month of December in this particular index. The NASDAQ definitely shows us that movement to the downside is still in play. Okay, the market is still weak in the NASDAQ. We have not received any positive news in this particular space in the technology sector in the NASDAQ. It continues to show you that the weakness is going to happen. This market is not done with lower prices. You can see that here on the NASDAQ as well. On the monthly chart, the weekly chart continues to show you the same depiction as the monthly bars. We may try to come down and hit to where a lot of this trading action has occurred in the NASDAQ. So that's why I just drew in this support line around 57.50. This is a support area right now where the NASDAQ is trading, but you can see here that the weakness is readily apparent and that the movement to the downside is still here. Okay, so 57.50 ultimately you might hit that 5,500 point area in the NASDAQ before we might see some reprieve in this particular arena for the NASDAQ until we're able to get some more resolution, some defined accomplishes in this space. The market uncertainty will continue to push this space down. Looking at the television now, the Dow is down 502 points, down 2.28% before the market closed in the next couple of minutes. So it definitely tells you that many of the investors are trying to get out this space before the holiday season really kicks in. Looking at the S&P 500, this is the monthly chart. You guys can remember we've been tracking this indice for a long time, and we had this support and resistance area, and definitely here, looking at the monthly bar, we're going to hit this ascension line in the space in the S&P 500. Okay, I'm definitely expecting the market to continue to move lower, and it definitely seems probable that we will break our ascension line to the downside. 2,200 points, maybe 2125. I could even see the S&P 500 hitting that 2,000 point area as we continue to trade throughout 2019. So again, the market in the S&P 500 is not indicating any signs of strength entering the space. Still looking for this particular market to move to the downside as well. Until we're able to see some precursors of strength bars into the space in S&P 500, we will continue to move to the downside. Okay, so we might hit that 2,300 point, ultimately our ascension line in around that price. And if the weakness continues to reflect itself on our ascension line, then we will break through it to the downside to lower prices. So remember that. Okay, but the market for the S&P 500 is weak as well. So now let's go ahead and look at the last one, the monthly chart for the Dow. Definitely we're closing towards the low end of the bar in the monthly chart. Shows us that weakness is still here, still looking for the Dow to continue to move to the downside. The weakness is on the weekly chart. We might hit that 21,000 point area early in 2019, so definitely keep that in store. But overall, the market in the Dow is still weak. We're not seeing any indications of precursors of strength entering the market, so still looking for the Dow to move to the downside as well. So all three indices for the United States, NASDAQ, the S&P 500, and the Dow, all are still reflecting weakness into the space. We are not seeing any precursors of strength entering on these price charts, whether it's the monthly, the weekly, or the daily price bars. We're not seeing strength yet. So that tells us that the continuation to the downside is going to happen. And with many of the things that I mentioned that the Grinch has used to take the air out of the market, those things have not even been resolved yet. So that is one of the main hinges that is keeping pressure to the downside for the financial markets. Okay, so that is what we have for you all today. Just want to give you all an update on what the financial markets are trying to display to us on the price charts. The MarketWatch article continues to show us the same thing that the price chart is listing to us. So again, the overall agreement, market sentiment is still movement lower. Okay, so until something changes, that will continue to be our stance according to the price charts, as well as what the MarketWatch article is reflecting. If anything changes, we may come back on YouTube and upload a platform, but definitely if you were a member of ours on our Patreon page, you will be notified of the things that are occurring in the financial markets. Again, if this is your first time watching our content, do not forget to leave and not subscribe. Okay, so make sure that you come and subscribe to our channel, because we do make this relatively easy to understand what the price bars and the volume is indicating for future progression. Okay, without the understanding of financial or language analysis, you will not be ahead of the game. So make sure that you subscribe, like, and share, and make sure you hit that bell notification too, so you'll be notified of when we upload this type of content. Make sure you all maintain your profitability, and I will see you all later.